All right, we are live. So welcome back to Dapp University. So today we've got a lot to talk about in our stream. We're going to talk about what is next for Ethereum in the crypto space now that the Ethereum merge has taken place, quite successfully. I will add to that. Okay. Because that's got a lot of people wondering. Like, we've been looking forward to the merge for a really long time. We've been personally talking about it quite a bit on this channel, and people are kind of sitting around scratching their heads going like, hey, what's next? Well, we'll talk about exactly what those things are today in this video, because there's actually a pretty big roadmap ahead of us. We're going to look at that. We're going to look at a lot of other updates that have happened in the space since our live stream yesterday. Again, we do these live streams Monday through Friday on this channel. Just subscribe, turn on notifications. You're going to find out about those whenever you go live. We're going to answer some of your questions, take a quick look at the crypto markets, and a whole lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you learn how to master blockchain step-by-step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. All right, so got people in the chat here. We got Dale, Above Realty, David Stone, Kodia, Automatic Beats, Jay Lee, Mr. Pickle, Mark Henderson, see here, Daniel, Sasky, Jeff. Welcome, welcome, welcome. All right, so let's go ahead and jump into this. So the Ethereum merge is taking place, quite successfully, I might add. We talked about this yesterday in the stream. Things went about as well as you could possibly hope for, maybe even better, okay? We had, really smooth transition, finalization happened quickly. There were no major showstoppers like I had predicted before this event, okay? And honestly, this was a massive technical feat that I think a lot of people just don't even really appreciate how monumental it actually is, okay? Of course, we're seeing a dip in the Ether price right now, again, along with many other, cryptocurrencies across the entire board. Okay, there's some FUD surrounding the Ethereum centralization of staking power. We'll talk about that in our stream today. But I think a lot of that's really overshadowing what an insane technical feat this actually is. Because if you've ever built software for real in the real world and had to change anything in a production environment, okay, you know how challenging that can be, but then multiply that probably like a million, okay, because you're talking about making a change to two different blockchain environments, which are already insanely complex to begin with, and then each blockchain environment contains billions of dollars of cryptocurrency on top of it and has an insane amount of reputation risk on the table, not just for all of the Ethereum space, but all the crypto space, and the entire market cap of all the cryptocurrencies is likely going to be affected by any negative outcome surrounding this event. So that's a massive, massive, massive feat, and it went about as well as you could possibly hope for. So that being said, what is next? All right, what is next? So I'm going to look at some of the roadmap for what's going to happen with Ethereum, because this space can be a little bit confusing because, Ethereum is on a multi-phase, multi-year roadmap to actually becoming the final form that it wants to be. Because, Ethereum, when it was created, was really like a prototype to get it out there and then, get things working, and then it would get upgraded over time, okay? So that's really what the first version of Ethereum was. We had proof of work, and it's now working on proof of stake. It's crazy to even say that in this video, but that's where we are now. Okay, and the whole plan was to make those transitions while people were actually using the blockchain and get market share rather than making it perfect before you even launch. Okay, so for a long time, that was called Ethereum 2.0. They have changed sort of the messaging on that and the branding to just be Ethereum, and that Ethereum itself is going to undergo several upgrades. We just went through one of the biggest ones called the Merge. Now we have several others coming down the pike, like the Surge, the Verge, the Splurge, okay, the Purge. We'll talk about those a little bit here. So that's what's next. Some of these are coming in a matter of months, hopefully, okay. But let's talk about one other thing really quickly, which is what's happening immediately after the Ethereum merge, particularly with the Ethereum forks, okay? Because I want to talk about this a little bit, and a bit of a word of caution, okay? Because we have seen a lot of people move their funds into their wallets, okay? Maybe if they had them on an exchange, maybe they bought ETH to try to take advantage of any forks. Again, now that Ethereum switched to proof of stake, we have remnants who stay behind to run proof of work, okay, to fork their own versions of the chain. And essentially, some of these forks are live, okay, and they're trading, but we've seen some potential security risks on some of these forks. Okay, so I want y'all to be very careful because there are several things to be concerned about here. We see some of these forks have already started to publish their RPC URLs to connect your wallet to start like moving funds around. Okay, but we have even seen some potential concerns about some security issues. Okay. Among several things. First of all, for the viability of the security of the forks really depends upon the amount of hash power. Okay, basically, since it's on mining, you have to have a certain amount of security behind the network in terms of mining support. And the real question is, is there actually going to be that sustainability based upon the incentives that are at play with the current forks and the amount of miners that are able to do. So that's one security vulnerability in the first place. Another one is we've seen some people change their chain ID already. Okay, now this is done intentionally, making native transactions non-replayable to prevent against a replay attack. But this, potentially had a side effect. Many EIP 712 contracts actually cache the domain separator. Okay. So basically, this means that signature verification is not affected by the chain ID changing after the contract's deployed, but this still means that a permit or meta transaction might still be replayable between mainnet and ETH proof of work. Okay, so this possibly includes some DEX marketplaces. Be extra careful. You could still get wrecked by this fork. So he put an update to some of these tweets about some of the specific contracts not being particularly affected, but you definitely want to exercise caution. Okay. With some of these forks out there, it's not as simple as just get free money and go cash out and celebrate. There are some potential security risks with these types of things. And of course, we have seen, pretty much a dump on all these forks across the board. As expected, of course, we're also seeing a bit of a correction in the ETH price as well. So that's not necessarily a fork-specific thing, but I think this is a fork-specific thing because people just don't really have a lot of long-term view of a lot of these chains. They're just trying to get the free money and run. So, and also, we're seeing multiple forks actually pop up because think about it. Like if you run a cryptocurrency exchange, like a centralized exchange, all you have to do is just you just spin up Ethereum and be like, hey, we just forked Ethereum. We created our own copy. Like, come trade your airdrop, and then just have some sort of liquidity there, and then you've instantly just printed a bunch of money out of thin air. So I have a feeling we're going to continue to see some more forks. Okay, so just be careful about all that. So yeah, definitely, be careful about those. So, well, let's talk about sort of what's next beyond just like today, that next week for Ethereum. And after that, the merge has been successfully completed. Let's actually look at some specific things for Ethereum itself that are coming up on the Ethereum roadmap. Okay, so the merge has been completed. Okay, so after the merge, we have several other things that rhyme with it. Okay, that are supposed to be part of Ethereum's long-term vision. So the surge, so it's in 6 to 12 months away. The verge, the purge, and then the splurge. Coming down the pike. So. Let's talk about each one of those things. So first of all, the surge, what is it? Well, basically, first of all these things are really about making Ethereum. I would say you could generalize it by saying those are all about scalability. Okay. So now one quick thing is, a lot of people will say like, hey, the Ethereum merge happened, but like Ethereum's not any faster. Like I tried to go make a transaction and it's about the same. Like it's still expensive. Et cetera, et cetera. Okay, so, just for full clarification, if you've been watching this channel, I've said this a million times, but if you're brand new and you're not, and you think that, well, that's the upgrade that just happened doesn't fix that problem. That's what layer 2 scaling solutions are for. Like this is where you create a second environment to do transactions that piggybacks on top of Ethereum. You pay the gas fees in that layer 2 with ETH, okay? And those are getting quite a bit of adoption, things like Optimism, Arbitrum, and others. And you can see the growth of these things in terms of the ETH value. has done pretty well, all things considered. If you look at it on a year time frame, like this has gone pretty well. Like this has gone the opposite direction of the crypto market. I'll put it that way. If you look at it in ETH terms, in USD terms, it basically I don't want to say it's flat because it's not flat, but it's less. It is not inversely correlated because you have you have two opposing forces. You have USD value of cryptos going down this way, but then you have ETH value of assets lot going up this way. And it's also a little bit misleading because some of these things are outperforming ETH in terms of price appreciation because they're smaller cap. But that also has the other factor of things that go to zero affecting that as well. So anyways, this is an okay metric for tracking the progress, okay? Not a perfect metric by any stretch of the imagination, but it is an indicator of actual growth. There's definitely an option going on the layer 2 space. So anyways, you can do that now. You can go use Arbitrum. You can go use Optimism, to make Ethereum faster and cheaper to use today. Those layer 2s themselves are upgrading. We also have zkSync 2.0, I believe, coming out next month. All right. So that's something to definitely look forward to in addition to what's happening with Ethereum's roadmap. Let's see here. How many days away? They've been tweeting out about this quite a bit. Let's see here. 44 days as of 2 days ago. So I'm just going to estimate about 40 days away from zkSync 2.0. So why is this a big deal? Well, this is a zero knowledge based rollup environment, okay, where you rely more upon cryptography rather than, a lot of the technology the optimistic rollups use to validate transactions, okay? And it's also going to support a native Solidity compiler. So it basically makes it easier for you to port your smart contracts over those environments, okay, and bootstrap those ecosystems. So this is a big deal, okay? Now, zkSync is, they have essentially... Yeah, people wonder about airdrops all the time. Like, hey, is this person gonna have a token? Is that person gonna have a token? We've got some airdrops to look forward to in the future. Of course, Optimism did their airdrop. Arbitrum will probably have an airdrop in the future. Okay, I don't have any insider information on that. I'm just sort of stands to reason that they'll probably have a token in the future. But zkSync, if you go look at their documentation, it just says like, will there be a zkSync token? And it just says yes. Okay, they don't give any details about it beyond that, but they just, they say they do. So that's definitely something to look forward to in the future as well. I have a feeling there will be some airdrop incentives around that particular token. All right. So just a heads up on that. So anyways, back to the Ethereum roadmap, right? So what's next for ETH? I wanted to include that little bit about layer 2 scaling solutions because that really is an Ethereum thing. And, some of these next phases are going to take many months, some of them even years to play out. But the layer 2 scaling solutions are happening. They're iterating very fast. We're seeing month-over-month changes. We're seeing multiple upgrades, shipped among multiple competitors within 2022 itself, okay? So that space is definitely heating up. But let's talk about sort of the next items on Ethereum's roadmap. So the main one that I want to talk about is the surge, because that's the next big thing, okay? So we saw this here, the surge, the verge, the purge, and the splurge. But the surge refers to Ethereum basically implementing sharding, okay? So basically, what does that mean? So sharding basically means taking your blockchain and breaking up into smaller parts, okay? So basically, let's talk about what the bottleneck of scalability here is. So if you have a blockchain like Ethereum, and I send cryptocurrency from my account to yours, the entire blockchain, more or less, just to simplify this illustration, the entire blockchain more or less is responsible for, essentially making sure that transaction is valid and, putting it in the blockchain, right? It's a very simple way of explaining it, all right? And also keeping track of all the history of the entire blockchain so that your account balance gets updated properly and mine gets, debited. So explaining sharding in a very simple way is basically taking that responsibility that I just talked about and not making everybody responsible for it. It's making smaller chunks of the blockchain essentially responsible for that exact thing that I just talked about. And then everybody sort of like collectively shares the responsibility of making sure the shards are working together. And then you can sort of just, you can have scalability enhancements that way. Now, if you want to get more detailed and read exactly how sharding works, you can definitely do that. I'll probably try to make a video that explains sharding more in depth, maybe with some outlines and some illustrations so that you all can, see that better. Okay, rather than just this simple, rough explanation. But that's one of the next big things on Ethereum's roadmap. So what's the big deal about sharding? Well, it's actually going to have a significant improvement for Ethereum's scalability. Now, I haven't seen the latest numbers on sharding, okay, and what it's going to do for scalability, but let's just use a simple example of saying a 2x benefit, okay? The last time I saw numbers on sharding, we were looking at a potential 2x. So it might be more or less than that now, but well, I'll do some more research on that, and then, like I said, maybe I'll make a video about it. You all can check it out. So let's say if you get a 2x scalability benefit from sharding, you might say, well, who cares, right? If the blockchain, can only process so many transactions per second. It's not just about transactions per second. It's also about throughput in terms of the block time as well. So basically, let's say you have that, right, and then with roll-ups, let's just say, just for example purposes, you get a 50x scalability benefit, okay? Well, if you get 2x with sharding, you basically take whatever scalability you get with that roll-up and you multiply it by 2, okay? So that's how you get 100x scaling, is you use a roll-up that gives you like 50x, and then you implement sharding, which gives you 2x, and that's a force multiplier for whatever you're getting on the top level, okay? So again, those are rough numbers. I don't have the exact numbers in front of me right now. Like I said, we'll do some more in-depth research on what the latest figures on that are, and then try to actually make it detailed inside of a video, and then we can use that for you all. So that's what to look for next, and that actually is pretty exciting because that can also make rollups cheaper. Okay, it can make rollups faster. We have aspects of some of these upgrades that basically separate the roll-up transactions from regular transactions so that they can have their own special characteristics and make them better, okay? So what is the timeline on this? Well, sort of the rumor, okay, with the surge is sort of a 6 to 12 months away. So that could be, mid next year, could be, the end of next year. I definitely take some of these estimates with a grain of salt for sure, but it looks like, in 2023 is the expectation for the surge. Now you might say, okay, but all these things have to be implemented one after one. That's not necessarily true because we have Vitalik himself in response to some of the upgrades here, talking about the merge, surge, verge, purge, and splurge are not stages. They're all happening in parallel, okay? So we're seeing development on all these things happen together, but my understanding is that the development's happening concurrently, but the shipping is not gonna all get shipped at once. Okay, so my guess is not my guess, but I'm pretty certain the surge is going to be the next thing that gets shipped all on its own, and then we'll see these other things come out sequentially after that. So somebody's talking about free gas fees. So the gas fees will never be free, but that's also by design, okay? So you have to understand, like, this is a really common question I get, which is, why do blockchains have gas fees in the first place? Well, essentially, there's several reasons. One, on the user side, is to prevent spam on the network. So you don't want people to just include low-value transactions on the network to basically spam it, all right? And the other reason is, people who run the blockchain have to get paid somehow, right? There's two ways they get paid. One way is from the blockchain creating new cryptocurrency itself. The other way is from transaction fees. So whenever you pay fees in the network, you're paying to help secure the network. Okay, so it's a two-part. It's a twofold reason for why you have those transaction fees and why they're not going to go away. We can reduce them. That's okay. We want to reduce them because that can actually, any volume drop in transaction total fees collected can, any volume drop in transaction, not volume, any drop in transaction costs can result in a greater volume of transactions total because that can help increase demand. So it's good to make transactions cheaper because more transactions will therefore happen. NFT Gamer from India says, shut down all my mining rig. Feeling very emotional and heavy. Yeah, feels kind of crazy, doesn't it? Okay, so here's a great question. Is it true that only a few validators own most of the staked ETH and would be considered a vulnerability? Yeah, so I talked about that briefly at the beginning of the stream. I've seen this floating around quite a bit, so I will address it. So let me just pull it up. So I've seen this tweet in particular. It's a great question. I will address it right now. So this is floating around. Okay, so the merge has made Ethereum more centralized than ever. This is terrifying. Like and retweet. like a sensational headline. Like and retweet. So here's why. Anyway, since the merge, the top 3 entities alone have produced almost half the blocks. 2 private companies, Lido Finance and Coinbase, lead the pack. Okay. So there's 2 things to think about here. Number one is I've seen another tweet floating around that's the top 7, the top 7 Ethereum validators or whatever have validated more than X% of the network. It's some majority, right? So it's usually from Bitcoin people. And again, I hold Bitcoin. So I'm not against Bitcoin. I'm talking about sort of the Bitcoin cult, which I do not find myself part of. First of all, they don't talk about how mining pools control some crazy amount of hash rate on the Bitcoin network. I can't remember exactly what it is. It's an overwhelming majority. Now, then they'll respond to that, and they'll say, yeah, but mining pools aren't just people. They're not just individual companies. There's people who pool together. So the other thing about this is Lido Finance, the biggest one here, is not just an individual person either. Now, Lido is an entity, but there are other people who validate for Lido, okay? So let me see if I can find... I saw a breakdown of this floating around as well. Yeah, here's a breakdown of the individual validators that make up Lido. So it's broken down across this, all right? So you can see staking facilities, Chain Layer, Simply Stake, Prismatic Labs, Nethermind, Everstake. So there's all these smaller players that are getting counted inside the Lido number. So a lot of the stats are very misleading. I'll put it that way. But it's a good question because I've seen it floating around and it's very, yeah, it's easily concerning on the surface, but there's a lot more to it than meets the eye. What is the best way to stake if you have 32 ETH? So, this is a very, so someone else says, do I own any Bitcoin whatsoever? Yes, I own Bitcoin. So if you have 32 ETH in order to stake, so I'm not, I'll try to after I frame this answer, I'll give you some options, okay? So, so the question is, what is the best way to stake? The intended way to stake, I'll just put it that way, is essentially to run your own validator. So you have to you have to have hardware for this. So, you can either do it in the cloud or you can, do a at-home validator. That's really the best way. The best way is to do an at-home validator. You can, they sell little computers that you can basically, that are spec'd out to do this, okay? And then run through the setup in order to set up your own validator. And then, there's some technical steps involved, but at-home staking is really the best way to do it, okay? And then essentially you transfer ETH to that, and that's how you're going to get the highest yield, the highest returns, okay? Now, you can do custodial staking with other, staking providers. Now, that being said, you have to understand is right now, if you're staking your ETH, you're not going to be able to withdraw it until after the post-merge cleanup period. So that's another warning to you there. Best way to stake is medium rare. Suppose this Rocket Pool. Yeah, Rocket Pool is another staking provider. So anyways, let's take a quick look at the crypto markets. People ask me about this, so like what's going on here. So of course we're seeing some red across the board. We are seeing red for sure on ETH price. People are saying like, hey, why is ETH going down? We talked about this quite a bit before the merge actually happened, that we could see some sell the news type of event. That being said, I think honestly what's going on with ETH is just what's going on with the rest of the crypto markets, which are highly correlated. I mean, Bitcoin's the one that's dumping the least, but everything, let me see if I can pull this over. It won't show the trend. I mean, this trend does not look that different from basically other crypto on this list, okay? So, honestly, I really think that, the CPI numbers that came out recently have a much bigger impact on the price of Ether right now than the Ethereum merge, okay, and particularly other cryptocurrencies as well. Basically, everything is, headed in the same direction. Like if you just look at the stock market, like we're on basically the same trend. Okay, there's a high amount of correlation here. Okay, I mean, you can look up any major stock index. You can look up the NASDAQ, right? You can look at the NASDAQ 100. People try to use that as their proxy for what's going on with crypto as well. Everything's kind of headed in the same direction. Again, that's got a lot to do with macroeconomics. Again, I don't pretend to be a macroeconomics expert by any stretch of the imagination, but sort of the consensus view here is that inflation is the real problem, okay? And whether you like it or not, they're trying to fix inflation by raising interest rates and basically destroying demand. And, that's having a pretty significant impact on every single asset known to man. There's really not much of a safe place right now. Somebody says the like button has been clicked on. Yeah, go ahead and click that like button if you haven't done it already. That really helps the streams out, so the more people that YouTube will show it to more people. Is it a good time to learn blockchain development? Yes, it's a great time to learn blockchain development. There's lots of reasons why. I mean, the demand for blockchain developers is still really strong, despite the cryptocurrency space being quiet, because especially among the technologies that I teach here at Dapp University, Ethereum. I mean, Ethereum's the largest developer ecosystem in the first place, but we're still seeing a significant amount of adoption, especially as layer 2s have expanded, okay? So the demand is high, okay? There's lots of people who are building despite cryptocurrency markets being down. a lot of the smart people are thinking and playing long-term games, not short-term games, okay? And so they all need blockchain developers to carry out those visions. So the development is still really strong. And why is it also a really good reason to learn right now? Well, because, the space is quieter than it was. And so, that gives you an advantage in many ways. Like if you're serious about getting into the industry, then like the fact that you're here now trying to get in is a pretty big deal compared to if you were trying to like get in at the height of 2021 or something like that, right? Now, that you still had a good opportunity at the height of 21, but what I'm saying is this additional sort of qualifier right now where like, people might question your motivations a little bit in 2021. Like if you're brand new trying to get in the space, like, oh, this is sort of just like a fair weather person who might, bounce and leave the industry if things get rough again. And now that things are quieter, it already says a lot that you're trying to break in and see the future potential and are sticking around while the space is quiet rather than when it has a million eyeballs on it, okay? So that's actually a pretty big advantage for you. So that's another good reason to be learning now. The last reason is when things start to get crazy again, which I definitely anticipate they will. I know it may not feel like it will right now, but trust me, I was here all through the 2018, 2019 bear market when it was a ghost town, and it got crazy again, okay? But all during that time, I got a huge competitive edge by doubling down and really learning during that time. And you have a huge advantage now because most people are not going to be focusing really hard on their technical skills while the space is quiet. And then the attention so highly correlated with the price. So if the price starts going back up again and then people start getting interested again and then some new tech pops out that is, gets everybody excited, and you already understand all that, like you have a huge edge. So that's another reason to really double down. To be good at programming, does one have to be good in math? Asking for a friend. So that's a really common misconception. You don't really do that much math in programming, depending on what you do. I mean, with blockchain, it's a little bit different because you're dealing with money quite a bit. But it's not like advanced math most of the time. Like you're just talking about like addition, subtraction, multiplication, division, exponents, and maybe like remainders and stuff. And understanding how to round is, ratios in terms of like prices and stuff like that. We're not talking like there's not that much like maybe a little bit of algebra when you're talking about prices and equations and stuff and graphs. But nothing advanced. Like it depends on what you do. Like if you're building like a derivatives protocol, like if you're getting into like advanced financial applications, you're gonna need to learn some of that stuff. But most stuff, no. It's more like reasoning and logic, and like if this then that, and like variables, and like understanding where stuff is stored, and really programming specific types of things, which I find that there's not always a high correlation between mathematical skill and the ability to acquire those skills. Do I think Solidity is a bottleneck to mainstream adoption? No, not at all. It's like saying JavaScript is a bottleneck to the internet taking off. JavaScript is, I'll say previous versions of JavaScript's gotten better, but like early JavaScript, I'll put it nicely, leaves a lot to be desired, okay? But it was by no means a bottleneck for the internet taking off. And the internet basically runs on JavaScript. When am I coming to India? I would like to go to India sometime. So somebody said there in this other boot camp will be part of the Ethereum 2.0 upgrade. Of course it will. Yeah, there's not much that really changes in terms of developer stuff. Somebody says this is trash. I'm not sure what the trash is. If they're just giving a mean comment to my commentary. So 18,000 Web3 developers after 7 years shouldn't concern us. Surely it could be more intuitive. So that's a good question. So, I mean, Solidity is like some of the stuff inside Solidity is a feature, not a bug. Okay. Now, here's the other thing. I'm not saying that Solidity is the best programming language on the face of the planet. Okay. There are some things that are quite frustrating about the Solidity programming language. I'll be fully transparent about that. But there's also things that are quite frustrating about JavaScript, like I was saying before. A lot the intuitiveness of JavaScript, people take for granted because, you know, basically they started with JavaScript and now they think like a JavaScript developer. Okay. So, I mean, intuitiveness is not necessarily a recipe for long-lastingness. I mean, think about like the programming language Ruby, for example. Like if you speak English, Ruby is an incredibly intuitive programming language because it reads like English, okay? And everything's very simple. Now, you know, if you run something like Ruby on Rails, it's very resource intensive. There are certain scalability problems with, you know, Ruby. You got concurrent, you know, it lacks certain concurrency features that really make it take off. So there are other like performance things that have hurt its long-term adoption. Okay. But the intuitiveness of the language itself is not necessarily an indicator of the long-term success. That's the point I'm trying to make. I have an Instagram account. I haven't posted on there in a long time. Do I need to be a JavaScript expert to learn Solidity? Absolutely not. Start off with Solidity. And then basically learn JavaScript as you go. So many proof-of-stake projects have failed before. Yeah, I don't think that's necessarily a good indication of Ethereum's future, though, because you're talking about a lot of network effect behind the Ethereum chain compared to these other chains. All right, everybody, great questions. That's all I got for today. You know, as always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. And, you know, if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find those free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you how to master blockchain step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks.